Hello everyone, how are you? I hope you're all doing great. This is Gabriel from priceactionvolumetrader.com. So today I wanted to put on a video and go over my basic strategy that I've been using for a long time now regarding trading horizontal support and resistance levels. You know, when it comes to trading, there's so many tools at hand for the traders that a lot of times it can get confusing as to what is the most effective way to do trading and what works best, etc. Well, one thing we can agree for anyone that studies technical analysis is the immense importance we have in regards to support and resistance levels, specifically horizontal ones, because as we know, for example, we can have support and resistance that's horizontal, and then we can have what we know as trend lines, which can be considered as a form of diagonal support and resistance. However, as we know, horizontal support and resistance holds a lot more importance when it comes to trading. So the goal for this video is just to give you the easy steps that I follow in confluence with other factors and strategies that I use. But I think for anyone trading, no matter what your level is, if you're starting out or if you're intermediate or more advanced, these basic rules for trading horizontal levels are going to be key in helping you stay out of low quality trades and just look for good risk reward ratios when it comes to your trading. So make sure to watch this video all the way through. So I'm going to be giving you a lot of great information throughout, and please make sure to subscribe and hit the thumbs up. And be sure to check out all my other educational videos that I got here on YouTube. So without further ado, let's just start off by basically defining first what is support and resistance. Well, as we know, support and resistance is basically levels where, in the case of support, it is a level where price comes down into, and the level is defended by buyers, and this level cannot get past a certain price. So in this case, whenever price would come down into this level, we can see that the buyers overwhelm the sellers, and we have a reaction and price pushes back up. So then this will be our support level. Now keep in mind, levels, they're not always have pinpoint accuracy. So you're going to see levels that sometimes gets exceeded by a little, but it may come back, etc. But we just need to see this overall as like a zone. And then the same is true for resistance. So resistance would be a level where price just comes back over and over, and it just cannot get through. So in this case, when price comes into this area, the sellers are overwhelming the buyers. There's more supply than demand, and that means a rejection of price, and it will move lower. In this case, there's more demand, meaning more buying, and in this case, there's more supply, so more selling. Okay, so that's the basic principles of support and resistance levels. Now, another key thing to know about these levels, which a lot of people are they're taught incorrectly to believe that the more times a level is tested, the stronger it becomes. And this is, as we know, actually contrary to what the true function or behavior of support resistance levels is, because every time price comes into this level, it starts eating away orders. Like when price came here and bounced and came back, there was buy orders here. When it comes here, it eats away some of those orders, and eventually the buyers overwhelm sellers and it goes out again. It comes back, there's more orders, but each time it just starts coming lower and more into it. Therefore, it starts just eating away all this wall of buyers that are here. And of course, we know that even when price goes away, there might be buyers that are reloading orders here. But if we see from a price action perspective also that we see the bounces are getting smaller and smaller, that means there's more and more pressure by the sellers. So then let's say, in this case, well, I drew these out coming out all the way here. But let's say, in this case, if we just would come back down here, so let's just ignore this here. Let's assume this didn't bounce here. So then if we come back down here, eventually this level is going to break. Once this level breaks, now this whole area, which used to be strong support, when we get a clean break off of it, and this can be on any time frame, you know, that's what we're going to look over. We're going to see many examples in this video. This can occur on any time frame. However, you know, if this happens on the hourly or higher, then it has a lot more significance and strength. So now, if price comes back here and revisits this level from the other side, we know that this is a general rule when it comes to technical analysis, where the level that used to be strong support, once broken, we expect it to become strong resistance when visited from the other side. So this is how levels of support and resistance flip once we go on either side. And then now, this is true. If we come to the other side and we reject, and we just start coming back and reject more, now this level is gaining strength. A level, the more times that it is touched from either side, now it starts becoming stronger, because now we're seeing that it's reacting on both directions, from above and from below. Now we can apply the rule that the more times it touches, it starts becoming stronger. But if we start touching it too much from one side, well, we can expect eventually it's going to fail. And then the same thing here. If we come back here and eventually break it, now this strong resistance, we expect it to come back, and now we expect it to act as a strong support. So the whole strategy that I'm going to go over here, and this is the concept that's most important that all of you should just remember, is when trading support and resistance levels, I want to buy what used to be strong resistance. So in other words, I want to be a buyer at a support resistance level when I'm coming up to the inverse of what it did last. So if this level was last resistance, then I want to buy it on a visit back. And the same with support. If I see a level that used to be strong support, I want to sell what used to be strong support. So I want to do the opposite of what the last reaction of the level was before we get a clean break. So in this video, this is what we're going to go over. We're going to go over how we can take our highest probability trades off of horizontal support resistance levels when we visit it back and we expect it to flip to the opposite. So let's just start going over some charts here. Let's, for example, I'm on a futures chart for the S&P 500. This is a 4-hour chart. So let's just illustrate here what we have. For example, how do we identify support and resistance levels? Well, very easily, we can see we have very strong rejections around these areas. And like I said, This is not an exact level. We're going to have wicks that might exceed it a little bit, etc. But what we want to see is just the overall area that is respected. So as we can see, let's make this green to show that it's strong demand or buying area. So we can see this is a strong support level, especially since we're on a 4-hour time frame, and look at the strength of this bounces. This has been weeks between touches. And then on top, we have right here a strong resistance level. So this has been an area where it's a strong supply area where buyers have overwhelmed sellers, and we can see also the strengths of the rejections. So now in the future, if price would break out of this with a clean breakout, I would wait for a pullback, and then this is an area of interest of mine to buy for a bounce. The same, if we come and break below this, now if we come back, this is an area that interests me to sell right here, because as we see, we have strong support broken. Now I expect it to be a strong resistance on the other side, and the same thing here. So this is the basic premise of all the examples and things that I'm going to show you. Here let's go into a daily chart, and then we can identify here. We can see, let's use a horizontal line. Let's make it thick. So here, for example, we can see just overall a strong support level. Even though we was exceeded back here, we can see how it continued to be respected. We go back more, we can see here, for example, we had a strong resistance level that we saw got broken and retested right here. For example, over here, we can see this was an important resistance level. We can see all the rejections that we had here. Eventually, we can see that the sellers at this level were just overwhelmed. We went to the next one, and look now from the other side, it's holding as support. The same thing below here, even though we have sort of a wide area here, but we can see how in general all this were important support levels right here, where we see buyers just overwhelmed sellers. Okay, so let's just go over examples that I've made on charts here and show you what I mean with this ultimate strategy to trade these levels. So we have here the Bitcoin chart within the daily chart. Now, some important rules when it comes to trading these levels that I want to tell you, and I'm gonna write them here so we can have them as reference. So let's put trading previous support resistance levels. So there's several rules that we want to apply on this. First, we want to pay attention to the trend and market structure. So meaning, if we're looking to go, for example, long, we want to see a bullish trend happening. And if we want to go short, we want to see a bearish trend. Then we want to see the number of touches that the level has had before it's broken, because the more touches we said it has from one side before it breaks, the stronger reaction we can expect from the other side. The next factor we want to see is how clean the break is. this is important because if we have a level that we breach, but price just starts wicking back and forth on it before we take off, that sort of makes the level lose strength. And we're going to look over examples of that. Then we want to see the strength of the move away. We want to see a strong reaction when we break down from that level. And we want to see a nice rounded retest with time in between. This is also going to help us because the more time that a level has between when we break it and the retest, the more prominent it becomes. So the more traders are going to be trying to do the same, and there's going to be more pressure then to fade that level. Okay, so these are pretty much the 5 factors that I want to take into consideration every time I'm looking at trading levels like this. I'm going to leave this here so we can just keep it on here for future reference when we're looking at all the other things. So let's start with Bitcoin. Let's analyze this level. So we have an hourly chart, a daily chart here on Bitcoin. What do we see here? Where we can see there's a very prominent and important support resistance level right here. And again, we can draw it as a horizontal line or we can draw it as a zone. In general, I prefer drawing it as a zone, as a rectangle, just because that lets me catch take off the magnet. That lets me catch all the different levels, because we can see here, how do I like to draw the zones? Well, I like to first take the highest level down to the lowest level of overall rejections in this area over here. So we can see we have this zone, which is about, let me see, this is about so it's about a $500 range on Bitcoin, which is a wide area. But if you're doing like swing trading, you got to take in mind what time frame you're on. If you're looking at a time frame like the daily, then you're most likely going to take trades that are more swing trades that you're going to leave on for at least a few days. And you have the advantage then of being able to use a little bit wider stops. And I'm going to go over this too, how we're going to put our stops in this and why these levels are so efficient in terms of looking for good risk reward trades. So we have this level, resistance, 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 resistance. This level has been now tested for 5 times. We've continually, even more, if we count this whole area, we have 1, 2, 3, 4, 5 times this level has been resistance. Then we have right here, if you want, I can zoom in so we can see this more clearly. We have what we call the point of release, or the breakout point, which you can see in this case. Let me use the arrow. We had a point of release right here. This is the point where price just shoots up in this case and cleanly breaks out of this level. We leave what we call a common gap in this case, which, as we know, gaps tend to be filled back. Well, especially there's several types of gaps, and I'm going to have a video on this actually on my channel soon, because there are breakaway gaps which might take a long time to fill. But in this case, this is what we know as a common gap, which, as we know, just common gaps like this, look how they all tend to be filled back in. We have a common gap here. We filled it back in. Whenever we have a big move like this, price always retraces it back to the base where we had a breakout. So in this case, we had a gap where we broke out of this area. So now in the future, this whole level here, once we make a clean break out of it, now this is what we're talking about here. What do we want to see now? Well, we have, let's talk about the trend. When we look at the trend, well, we see price is making higher lows. And we can even put, there's a really nice trend line here that we can see. Well, obviously this is after the fact, but we can see that there was a nice trend line here that almost got tested. We barely missed it, but we can see from a price action and market structure perspective, we just made a higher high over here on the daily. We broke above all this previous swing highs, and we've been making higher lows. So what do we expect right now? Well, we expect a pullback into this broken resistance, and we have trend and structure to the upside. So we expect this level to hold. So now let's just come here and actually we'll make this green now, because once we break it, now we are looking to play the opposite. And so now, as we can see, price comes back, fills back this gap into this previous area of resistance, and we hold, and then price just starts pushing higher. Okay, so that's pretty much the principle of this. You know, this is very easy to apply into any type of level. Like I said, the more touches, if you only have 1 or 2 touches before a level breaks, then it's riskier to immediately just try to fade a pullback. But if you have at least 3 touches and then a clean break, that is an excellent level where you can just leave a limit order to buy here. And where would you place your stop loss? Well, in this case, let's say we would put our entry at the middle of this area here. Our stop loss will always go below the last consolidation before we had the breakout. So in this case, we had this consolidation here before we broke market structure up and before we cleanly broke this resistance. Now we pull back, we can set our entry here, and then as far as targets, well, we can target previous highs. In this case, if we're going to make a higher low, then we expect a higher high. So we definitely think that this prior highs right here are going to be broken. So at the very least, this is our first target. Now, as you can see, the risk reward on this trade is not very big if we only target this previous high. But like we said, if we expect this to now continue its upwards trend, well, we can target previous highs before this one, which in this case, we would have this previous highs here. So we could even close part of our trade here, leave the rest to run, or we can just hold to have a bigger objective, in this case, a previous high. And now we got a 235, which is, you know, still not a great R&R, but, you know, it is a good risk reward for a trade that is going to have a high conviction of us taking. Okay, so now let's just go and look at examples on different charts. I'm going to just move this here, and we'll just leave this here as a reference, and we can come back into this if we need. So now let's go look at other examples. This is an example of Amazon. We got a 30-minute chart. So over here, what do we have? We have what we talked about here. we have an area here where we have clean resistance. Make this red. And even if we pull back, we can see that this level has had a historical tendency to reject prices. But we're just going to look at the most recent history. In this case, we got the 30-minute. And it's important when you do this type of trades, you want to focus on your trading time frame, depending what type of trader you are. Let's say if you're a swing trader, well, you want to, usually you're going to be looking for like the hourly, 4-hour, daily, weekly time frames, etc. So if you like to execute on the 1 hour, for example, then look for trade entries on the 1 hour. Don't start going into lower time frames, because then the price action is going to look a lot messier. There's going to be a lot more candles, and you're just going to lose the definition that you have of your execution time frame. So I recommend you pick a time frame that you like to take trades in, depending what type of trader you are. If you're swing trading, intraday trading, etc., find your best time frame and focus only on taking setups based on that one. So in this case, we can see here we have a resistance level which we've tested 3 times. We've broken it. Price continue. We even have a big gap here. We have this previous high, which was just wick through, but we haven't broken it. Price is coming back. So now we're looking also at this, what we call here, nice rounded retest back with time in between. What do we mean, just as a side note, by that? Well, we want to avoid trading V reversals. If we have price do this and we have a resistance level, but we see price come back really fast, this is what we call a V reversal, then this is not of, this has to make us weary, because this means that the move back has a lot of strength and this level might not hold it. Ideally, we want to see price start consolidating around here, maybe forming a flag of some kind of channel coming back into the broken level, and we want to see a nice rounded retest. That way we can see that there's been plenty of time accumulated, the level has gained prominence, and price has had a chance to balance until we come back into it. That's going to give us a much higher conviction on the levels. So in this case, we have 3 tests here. Price breaks out. We now break market structure up. We broke all the swing highs. So that means right here, we've made a higher high now. Now if you come back, we expect it to make a higher low. So now this same level, let's put another rectangle, but now we would expect the opposite reaction here. So now this level coming back turns our attention into buying this level. And in this case, we also, we can use other factors of confluence. For example, Fibonacci's is a great tool if you want to use in confluence with this. And actually, if you want, I have a course on trading with price action and Fibonacci, which goes very much into detail on this. But if we want to just take a Fibonacci here, and let's see, and just put it here, well, we can see right here, price came back into this previous resistance level cleanly. We have a clean break here. If price here would have broken and started doing this, then this level loses strength, because we don't want to see this. We don't want to see price chopping near the break point. We just wanted to take off quickly. And then we got here a pullback right into the golden ratio, the 61.8 retracement, and then a move back up. Again, so then this is a great example of using confluence of not only the broken resistance now turn support market structure, where we're looking for a higher low here after we made a higher high. We can see that price is now trending up, and we have confluence of Fibonacci's also, which generally I pay attention to. Let's add the 382 also. In general, this whole area around here, like 0.50, 0.618, and even 382 if it's like a very strong trend. But usually this whole area right here between 0.5 and 0.618 are really great levels to pull back into. Okay, now let's go into another chart. We have the Australian dollar, US dollar. This is the 1 hour chart. Like I told you, for me, my favorite time frames to use this techniques on is the 1 hour, 4 hour, and the daily. Those, I believe, hold the strongest behavior. In this case, I wanted to show you an example where we did not get the reaction that we wanted. Actually, let me put this on a 4 hour, because if not, it looks too scrunched up. But what do we see here? We have a very strong resistance level here, right around there. Can go into 1 hour just to show you more detail here. So you can see we came into it. Well, this was also a resistance. This whole area is like a resistance area pretty much. Remember, we look at this as zones, not just very specific price. And we can see we've had continuous rejections. Then over here, we have a very clean break. This is exactly what you want to see. A solid candle that just pushes out and doesn't immediately come back to test. Now, what did I mean about not going into lower time frames? Because, well, if we go down into a 15-minute time frame and we come back, then we might see, oh, in this case, no, this was also a clean. See how clean this is. Even on the 15-minute time frame, it was a very clean break up. So you can see this was a very nice break up. So now look at all this time that has passed between the tests. We broke out on December 29th and it came back on January 27th. So there's an entire month before we visited back this level. And now let's go look at the reaction here. And I mentioned this because look, we did get a reaction off of it. You can see we had a bounce off of it. But what happened here? Well, you can even see we had a little area here where we actually had a breakdown off of it. So we got to this point. This would now become a area of interest for us to buy. However, we had a bounce, but right over here, we had the same thing, but in reverse on a smaller scale. We now had a previous resistance level, and we can go down, let's say, into the 15 minutes so you can see in more detail. 1, 2, a level with 2 rejections. We broke down of it and we came back onto it, and now we had the opposite reaction in here, where this would have been the support, and now it came back. Now this was resistance right here. And what gave us a sign that this level might not be as efficient as we thought, even though we had all this time back? Well, if we look at it from a price market structure perspective, we can see that price was trending down. We were making lower highs, and right when we had this break, we broke all these lows, breaking market structure to the downside. So this was a case where we got our retest after a long time, but market structure was shifting overall. The trend on the higher time frames was down, and so we did not really get the reaction that we wanted off this level. Let's go see now an example here in gold. This is a 5-minute chart, so I wanted to show you that this is applicable even in very low time frames. And what do we have here in gold? Well, we can see very clearly here we have this whole area here that was strong support. We draw this all the way from the bottom of the last area of bounce of support and then up into the whole range. So we have this range here, this strong level of support that has held price several times. We can probably say 3 times in general, but they were stabbed a lot of times. So as we can see, a level, the more it gets tested and tested from the same side, eventually we have a very clean breakdown. So now we can always come back and look at our rules. So the 5 factors that we look for in this, and we see how we comply with all these rules. We have, in this case, we have a trend that has been broken to the downside since we broke this previous lows. Now market structure has shifted down, and we can see that price has been making lower lows, lower highs and lower lows, new lower lows. So now we expect a new lower high. Number of touches, we have at least 3 strong touches here. How clean the break is, we can see this is a super clean break. Absolutely no retests on the way back. The only thing that would put me a little bit alert and wary of this is that we came back rather quickly. But still, we can see that in this case, once we break this cleanly here, we come back and it's just a pitch perfect touch back right into the lowest level and immediate rejection strongly to the downside. Now, in this case, where would we put our stop loss, for example? Well, obviously our most logical place to put our stop loss, let's say we would go in right at the low. I mean, we might have missed this trade if you would have put it like, if you might have been conservative and put your entry here in the middle. So you might have missed the entry. Let me just take off these signs over here. Style. So you might have missed the entry. However, let's say that you put your entry right at this level and you got in. Your stop loss then, like we said, is going to go right above the previous high, in this case, of the last consolidation before we broke out of this level. And for your targets, well, if we're making a lower high now, then we're obviously aiming for a lower low now. So we can zoom out and just look at what are prominent levels here. Well, we have previous swing lows. So in this case, we have this very prominent wick here and this previous level right here. So this could have been our target. And as we can see, this was a great 3-to-1 risk-reward ratio trade. In this case, if you would have been able to catch this perfect entry, you would have had no drawdown. And as confirmed, price made a lower high and we made another lower low, and we would hit our objective right here where we're just targeting previous swing lows. In this case, if we zoom out, we can see that this was a very important swing low. This was basically the bottom before we had this wave up and before we just continued on the next wave down. And we can zoom out. This is important. You always want to zoom out and be in line with the overall market structure. And what we can see from the market structure overall, that price was trending down. We were coming and making lower highs, and clearly over here, now we're started making lower lows right here. So this would have been a great entry and a very good trade in this case. Okay, let's go back into stocks. Let's look at an example now on Tesla. So I know a lot of you test stocks. So what do we see here in Tesla? The chart looks a little messy because it's the stock, so there's a lot of gaps, and I don't have right now activated the live data on this, but we can see the same basic principle here. We look for the area where there's been strong resistance, so we have it right here. We could even go up into this, or we can even take this more recent area here, this last rotation down, and we can see how we had an area of resistance here, 1, 2, 3 times reject. Now we come into it, we have a gap up, which this is a very bullish sign once we gap up. And what else can we see? Well, purely from a market structure perspective, price is clearly making higher lows. So this is almost forming like an ascending triangle if you're looking at like classical chart patterns. In this case, we could even go from here and we can draw it like this, where we see we are in an ascending triangle formation. And what do we have here? Gap up and break up of this level. Right there, we just gapped up over this level. This is a 4-hour chart. And then we can zoom in. In this case, or well, we can just leave it anywhere in this area. But we can see that this level, once this resistance has been broken, we come down into it and we reject once here, come up, and we use it twice again. and we have a strong breakout. In this case, well, our stop loss, we would have put it, say if we would have been long, and let's say if we would have gone up, if we go in right here at the point where the gap shot up, well, our stop loss would be probably down here below the last predominant consolidation before we started shooting up and breaking this level. We broke market structure here when we broke this highs, so price made a higher high. This is a rather fast return, so even if we avoided and we didn't trade this one, we can see price again goes away and now comes back in a rounded retest. And this has been several days. This is a 4-hour chart. So if you put attention, this is a nice rounded retest that took 10 days to form. So this would have been a great entry for a swing trade, where you can just take your entry right here on a pullback again into this level, and we would define our stop loss below the last cluster before we broke out. And then for targets up, well, in this case, we would just target previous highs, which I think actually at this moment, this was the all-time high for Tesla. So in this case, you could just hold on and let your trade run and then just start trailing your stop loss along with it. Okay, now let's go back to a Forex chart. Let's look at these examples where we have on Euro US dollar. This is actually a very nice because we have back-to-back examples of this on here. And we actually have one that failed. So this is a 4-hour chart. And if we want to see just from here, what do we have here? We have our consolidation, clean break off of it. We did have a tiny retest here, but if we go on a lower time frame, this would not have shown. If you want, let's go into a 1 hour, and then you can see what we mean by that. So we have the 1 hour time frame. We can see we're clearly trending down. It's a very strong downtrend. Let's now adjust these levels here. So we got this here. We had a break. This I don't like right here. This is what I was talking to you about. See how we broke? Let me zoom in. See how we broke and then we wicked and broke again. This, you don't want to see this. So this is actually an example of when this is not really ideal in this case because of this. See how we had an immediate test back over here. And then we have this area, which did end up sort of holding, but we can see that it did wick back up like further. Like if you would have taken a short of here, you would have probably been squeezed a lot and you would have had to hold your trade for several days before it actually started going in your favor. But we can see here, clean support 4 times. We break, but we do have this little retest. We come back. This is another warning sign too. When price comes back to your level, but it just misses it by a little bit and pulls back down and comes back, you sort of don't want to see this happening, because this is just it's just telling you that market structure, it's sort of forming higher highs and higher lows right below your level right here. Then we have all this sort of chopping action. And then we have the other breakdown that I wanted to show you, which was the one over here. Let's go back to the 4-hour chart, because that's where I had the example more clearly delineated. Right over here, we can see we're continuing the trend down, and we have this level here. Old support. In this case, we can see it made a step back, but it didn't touch the level. So that means this level is still fresh, because price did not really test it on the way back. We have a very clean break. We're on the 4-hour chart, so like I said, we want to focus only on taking setups from our trading time frame. So in this case, let's say we're in the 4-hour chart. We have, again, 3 rejections. Each one is getting lower and lower. So what does that tell us? That's a sign that this level is getting weaker and weaker. We're making lower highs. Finally, we get the break. We break. We have a nice rounded retest back. So now this level, this rectangle, we expect the opposite. So now we would look to sell this level. And this is a great example of this strategy. This is basically all the elements that we want. We want at least 2 or 3 clear touches and rejections, clean break, no immediate retest. We want to see price fade away and have a good amount of time pass. In this case, we can see it broke in August, mid-August, and came back in, this was August 14, and came back on August 25th. So that was 11 days later, we come back. And in this case, you know, we could even put a, if you want a Fibonacci for like further confluence, well, we would take the Fibonacci from the last swing high. The last prominent swing high would have been, I would say, this one. And again, we can see a perfect retracement into the 61.8 level. Very strong rejection. We can see we left a pin bar candle, which is a great reversal candle. We are in the direction of the trend, meaning we are going short. And in this case, let me just take this off now so we don't get the chart too cluttered. Let's say we put an entry right at the level here. Our stop loss will be right above the last consolidation before we get the break of the level in market structure. And what would be our target? Well, like we've always said in the previous examples, we're making lower lows, we make a lower high, we expect a new lower low. So our first objective is to target previous lows. So in this case, this is the last prominent low. And if we pull our risk reward ratio calculator, we can see this is almost a 5 R&R trade. So this is an excellent risk reward trade. Okay, so this is a really nice example of all the rules here that we have for our system. We have here on Euro, we have another example here, and this is same concepts here as all the other times. We have this whole zone here, which used to be resistance 4 times. This wick, you can use it or you cannot. I mean, in this case, you can see how we leave a very big, there's a very big gap here. So you could use this level or not, depending what you want. You can even see this wick coincides right here with a mini level also that we broke down and we came back up. So we even have a mini one here for this high, but we're focusing on this now. So then in this case, we can see how we have 4 times strong resistance, very clean break on the 1 hour chart. Market structure is now shifted up. We can see we even have a very nice trend line here. We have a trend line with 4 touches and price shoots up. And now we apply all the same rules again. We see that clean break, a lot of time passes. We got a nice rounded retest back. We've been making higher lows. So now we expect a new higher low. We've just made higher highs here. We did come back down, but we're still focusing on this area, this gap that we still need to fill. And this is the breakout point. So now we can just apply the same principle. And now, so this is backwards. So this was the strong resistance, clean break. Now we come back, we expect support. We have confluence of a trend line. Market structure is in our way to go up. And if you want to use Fibonacci's, well, you can even put a Fibonacci here from the last major swing low to here. And again, we can see pullback right again into the golden ratio, the 0.618. I've honestly haven't even planned this Fibonacci's, but all the examples that we've given here have actually fallen in the 618. So you can just see the significance also that this has. But again, Fibonacci, we never just blindly trade off it. I just use it as confluence, in this case, with my horizontal support and resistance levels. Okay, let's just have 3 more quick examples. This is an example of one that failed. So I don't want to just show you something and tell you that it's perfect and works all the time, because obviously that's never the case in trading. So what do we have in this case? Well, we have a level that we had resistance here. Several times we rejected this level. But now look at this. Look at this break. Like I said, this is not a nice break. Look, first of all, look how choppy this is. We broke out. We immediately retested it and went back up. So, let's say we were able to not get in. So now we go out. And we have this. We have a good rounded retest. We broke market structure over here up. We can see that we got to this previous highs, but this is a warning sign. We only faked out of it. We're not able to close above this. So that means the structure has not entirely broken to the upside. This is crude oil, by the way, crude oil 1 day. And now we come back, we can see we have one very precise test that gives us a reaction, but this is similar to the other case that I showed you before. We have a small reaction up and we immediately come back down. If you see this happening here, if you have a level where you come back into it, you bounce, and then you come back again to test it very quickly, it's probably better to just abandon the trade, because in that case, you know, if a level is strong, price should immediately go away from it and not come back so soon. And this is some very strong candles here. Look, this is completely almost solid red candles back into this level. So this is an example where we did not get a good reaction up. We didn't clearly break market structure to the upside, and now we just rejected back down. And you can even see this level now was sort of behaving as resistance in the future, because now that this one, we discard this level, we can see that we now even have this here where we had, now here we have several touches support, a clean breakdown. Market structure has now been clearly broken to the downside. We can see how we broke all this previous swing lows were broken down. We come back up. There's been a long time here. This is a nice rounded retest. This is several months of price action on the daily chart. And now we come back into this point of release right here. And we can see that now this behaves in the opposite. So we can see how we had a bullish bias here. This was broken, so that invalidated it. Now we're looking at a bearish bias after we see market structure has broken down. And then we come back up, and the same. If we would have taken a trade here, let's say we would have entered at the middle of this, our stop loss will go above the previous consolidation before we had the clean breakout from this support level in this case. And here, even though this looks like a small level, just keep in mind that this is the daily chart. So this is actually this is about 2 weeks that prices held this level of support before we broke. So again, you know, just look at chances. The thing with this style of trading, you need patience. That is very, very important, because as you can see, sometimes it takes a long time to make a clean pullback again into these areas. Two more. We have here one with Ethereum US dollar, and we can see here clearly we have the resistance area here, resistance many times. Market structure, we can see how we are making higher lows here, going up. We have a break of this. We break all these previous swing highs are broken up. Market structure shifted. We have a very nice clean gap here that we expect to be filled back down. And then we look for an opportunity to fade it on a visit back down. And we have here a lot of time. This is a 1 hour chart. Each one of this is 1 day of action. So we see 1, 2, 3, 4, 5, 6 days until we come back into this. And if we do the block here, we can see how we have a bounce off of it. and we go up. In this case, let's even do the Fibonacci again, just to see for confluence where it landed. So this one went deeper. We went between 0.618 and 75 in this case. But again, the Fibonacci is just an extra tool if you want. Like even just looking at this level, I would just leave a limit order here to buy with my stop loss, like I said, below the last consolidation cluster. Now in this case, what happened here? Well, in this case, we had a reaction. However, it was not a very strong reaction. So we would have had maybe a small winning trade. But what happened here? Well, the same thing that happened on this now happened in reverse here. We had a very strong resistance level, support level here that was broken. We came back into it, and now from the other side, this level will now act as resistance. We can see how we try to come back into it. We did not really get into much further in, but then from the other side, until we come back right into this point of release right here, we can see now we had rejection from the other side. So this is a very clear example of how we have support level broken, resistance from the other side, and then here, resistance level broken, support from the other side. Now, how much yield we get with that's going to be dependent on the, the context regarding where we are on the trend and everything. Like in this case, we can see here, market structure was clearly broken here. We were holding these lows. We made a lower low. So now we could expect a lower high. So now that we have this lower high, even if you didn't get it on the trade here, just following all these principles and price action, well, now you say, okay, we made a lower high. We should have a lower low now. So you can just target previous lows, and you can just put your targets at these levels here, which we can see we didn't come all the way down into this one, but we did come and hit this level over here. Okay, and now the last example that I have would be right here on NASDAQ, the futures for NASDAQ NQ. And this is on the 1 hour. And again, we have just one of our classic examples. This is very common in futures. A lot of this work, like very, very exact. And in this case, we have right here a support level, 1 hour chart is holding, very clean breakdown. We broke all this previous swing lows. We've shifted market structure. We can see that. We could even throw a trend line here. When we draw trend lines, and this is in my video, if you want to check my videos, I'm going to release one specifically on trend lines, but we don't necessarily need to make trend lines always on the most external points. For example, here, trend lines, we generally want to use as much confluence hits as possible. So we can just draw this trend line further in like this, and just get more hits here on this line to give it more importance. And so what we have here, the same thing we've talked, price is making lower highs. Now we made a lower low, so we expect a lower high. price is a strong move away, clean break, no immediate retests, rounded move back up. We have the confluence of a trend line, and now this old support level, we just expect it to be resistance right there, and we can see we come back, a perfect test of it, and we just pull away. And if you're trading futures, you know that in futures on a 1 hour chart, a move like this is very, very significant, since most future traders are just day trading, so they're looking for smaller moves on the daily. We can see how we hit this here early on this day, and it just basically trended down the rest of this entire session right here. And in this case, well, we could put our stop. We don't have a clear cluster right here, but we can just put our stop just beyond where we had this area of support where the flip is. And for our target, we can just target previous lows, which this would have been the first target on this one's right here. This was the last swing from this wave before we went up, and we can see that we tested perfectly. Okay, so again, let's just bring back the rules right here for you guys. So when trading levels, this is the base of my whole strategy as far as horizontal support and resistance levels. We always want to look for trades where we are taking the opposite reaction of what price just did. So if price was just support and we cleanly break it, we look to fade come back into this level. And like we said, we want to see at least 2 or 3 good solid touches with strong reactions before we break. And then the same here with resistance, where we want to see, we want to long A, visit back into a level where we used to have previous resistance cleanly broken. We now look to buy previous resistance, and we look to sell previous support. And the factors that we want to always analyze, we want to make sure that when we go in on our fade, we are going in the overall direction of the trend, and we want to see that market structure has indeed been broken in the direction of the trend. The more number of touches we have before the breakout, the stronger reaction we expect on a move back into it on the other side. We want to see a clean break. We don't want to see price come out and wick and then go. We want it to just cleanly break and leave a clear gap. We want to see a strong move away. We don't want it to just come down and then come up and start like consolidating here. We want it to strongly just go away, and we want a nice rounded retest with time in between it. So we want to avoid, we don't want to trade V reversals where we just go out and back within just a few candles. We don't want to see that. We want to see a nice move away and a comeback in like a flag or channel formation, etc., and then a fade of the previous broken level. Okay, so that's pretty much the base of my strategy. I hope this has been very useful to all of you. This is part of the topics and concepts that I cover on all my trading courses that I have available on Udemy. You can go to my website, priceactionvolumetrader.com, if you want more detail on all of those courses and a breakdown of the contents. But again, this is, for me, I wanted to make this video just a lot of good, free, quality educational content, because I see so much misinformation on Twitter, on YouTube, people claiming to have strategies where they have like 95% hit rates and everything, which is just ridiculous. In trading, you're always gonna have losing streaks. You just gotta be able to manage them, be smart with your risk management, always follow a trade plan. And I think if you apply these rules when it comes to trading horizontal support resistance levels, I think this is gonna help you in taking a lot higher conviction trades with better risk rewards on them. And again, patience is key. We do not want to chase. If you see price breaking down from a level, do not chase it. We always want to just wait for it to come back into us, where we can set a good entry with a predefined risk and targets already in mind. Okay, so with that, I leave you. If you have any questions or comments, leave them down below, and please subscribe and leave a thumbs up if this video has been helpful. And again, just any questions, send them my way. I'll be glad to help any of you with anything that you need. And I'll see you in the next time. Be sure to check out all my constant videos that I put up related to trading education and Bitcoin, etc. Okay, so I'll see you back then on the next video, and take care.